Yeah, I expect the economy to stop growing in Q4. And I think, but the thing about this recession is I think everybody will know we're in recession in Q4.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of Pamp 1-ounce Silver Rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand Elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And back with us today is Don Durrett from goldstockdata.com. Don, thank you so much for joining us today.
Thanks for having me back, Elijah.
Well, it's great to have you today. Our last video was very well liked by our viewers. We got quite a few views on it. And thank you so much for that and coming back here for us. I did want to discuss the recent price action we've seen in the precious metal markets first, and also I know last time you talked about the possibility of shortages developing even in 1,000-ounce bars because of retail buying that could occur. So I wanted to get your perspective on that. But first off, new high for gold. What is your take?
Yeah, I mean, gold broke out in March, especially in April. Kind of got the confirmation, and I basically became a bullish in the first week of April. Once we had that candle breakout at 2070, we ripped right to 2,300, basically, kind of on a straight up. We've only had 1 month that didn't have that was down a little bit. I mean, I don't even think it was a 5% correction, which was in May. So gold has been on a bit of a tear here. But simultaneous to that, the S&P's been on a tear. If you look at their correlation, gold and the stock market, it's basically been 1-to-1. I tweeted it out yesterday about 3 times. The correlation is so strong this year. And that's my concern, because I think we're heading into a recession. And so I don't think we can all get, excited if we're gold and silver miner investors and saying, this is a bull market, jump in, throw all your money in, this is it, we're off to the races. Because silver and the miners haven't confirmed yet. They're on the verge of it, but they haven't confirmed yet. And I think they're both telling us to be careful here because of that correlation with the stock market and the fact that I think we are headed into recession here in Q4. And that sell-off in the stock market, if we are getting a recession, is going to be severe. It's not going to be, Wall Street thinks that, it's Q4 earning, we always have good Q4s. Everything's going to be fine. You always get a strong finish to the year, nothing to worry about. I think it's going to be the exact opposite. I think once we go below 5,200 on the S&P, it's kind of look out below. You go below 5,000 and then 4,800 and then 4,500. Those are all going to be levels that induce additional selling. So we go back at gold. So gold, it keeps hitting all-time highs, one after the other, but so has the stock market. They've both been, kind of trading together. I think gold is the leader here, not the stock market. I say that the stock market is the poser, and gold's the real story here. But let's go back to silver and the miners real quick. So I've been saying that we got to be a little careful there until we actually see confirmation in both. So everybody this week is saying, we're going to 32 tomorrow. 32 is like the last cycle high we just had. Now we're going to go back. We get above that, and it's kind of, we could be breaking out here, but we need to get above 32 and then above 35 before we really break out the champagne. And the stock market's flat today and gold's flat. They're trading 1-to-1. And so then if we look at the miners, the miners have absolutely ripped, and they got a new cycle high here. The last cycle high was 323, and I think we didn't get to 330, but we got close, and now we're down a little bit today on the miners, which is, again, following the stock market. So I've been saying that we need to get Newmont to 55 and the HUI to 340, and then silver to 35. I think those are the confirmation numbers we need to see before we get super excited. I mean, it's great. I mean, the one thing that gold is showing us here is that it's not going to break down. I mean, the stock market probably will, but gold isn't. If gold has a correction, which I think it is, so let's say a 10% correction from here for gold would take us to 2322. And I think there's a chance 2300 could hold. My target has been 2250. So say 2250 to 2350 is kind of the landing zone here, which isn't severe. But if you bought this week, it'll feel severe because you're buying the top here. Silver, you can go back 10%, it takes you to 27. And that's the top of my range for the correction. I think 25 to 27 is kind of the landing zone. And the reason why I have it lower, down to 25 is because silver tends to overshoot. And it tends to get hit harder in these big corrections. So that's kind of my analysis. The number one number to follow is not the gold price, it's the S&P 500. Follow that guy, because that guy's going to tell you, the real story. Because if it goes higher, gold will go higher. It goes lower, gold will go lower in the near term.
That is a concerning development where we've seen that correlation between the stock market and precious metals. So as you mentioned, if we see a recession, we could see a bit of a beating in gold and silver. I did want to ask you about retail buying as well. Here at Miles Franklin, we've seen at least myself as a broker has seen, I have seen an increase in demand here in September, which is seasonally pretty normal. Summer doldrums, and then we see increased demand. But your perspective on that end, as we move forward in this bull market, what do you think the retail demand could be? I know you have talked about in the past when we had you on that you really think there's going to be shortages developing even on the exchanges with 1,000-ounce bars, because the refineries are going to have to be ordering a lot of those to create retail product. So your perspective on retail demand and what you see coming.
Yeah, the key for retail demand is the fear trade. And it's been very quiet. Like this summer, the fear, because the stock market has been very strong. And so we've had like local coin shops saying that there's like 5 more sellers than buyers. Some have said it's up to 10 more sellers than buyers. And the reason why you have more sellers than buyers is because people can't pay their bills, so they're selling their silver. And then they don't feel this MOMO or FOMO for buying silver right now because there's the uncertainty isn't there. So the key thing that's going to flip demand will be uncertainty in the stock market, which is the recession. People don't realize how important it is because our economy is so over-levered. They don't realize how important it is for the economy to grow. If we don't have 2%, let's say 1% growth in GDP, you go below 1%, you go negative, and people are just going to freak out because of all the leverage in the system. That's when the uncertainty, they'll fear trade. Now, the fear trade, it doesn't happen all at once. It's not like everybody gets afraid at the same time. That's not how it works unless you have a crash. What happens is the fear trade is it's subtle. It starts with a small group of people who start showing up buying Miles Franklin silver, small group of people, and then it expands. So it's like that fear trade it kind of has it's a certain size, if you will, and the size of that fear trade expands. And all the fear trade is investors going towards more risk off assets. So there's been very little demand for that since 2009. 2013. 2013 forward, everybody was like, I don't need to buy any gold. I'm very happy with what the Fed's doing. Everything seems to be back in order, if you will. So we've been on about a 10-year run here where sentiment in the miners and sentiment in physical has been negative. The one thing that's done well is physical gold. And the reason why physical gold has done well is the big players who don't care about silver, the big players like the central banks and some hedge funds and some of these other guys have been buying gold all year as hedging. They're kind of getting ahead of the curve a little bit. Gold has been more of a go-to hedge than silver. Silver is the proxy to gold, and silver generally doesn't get interest until later on. And so the later on we're approaching, I think the number, just a ballpark number for me is 35. I think 35, you get above 35. And the reason why is the technicals. If you get above $35 silver, there really isn't a lot of some overhead resistance for a new high. And I think people are going to know that. And simultaneous to that, if you get to $35 silver, on the other side, you're going to be over 2,700 on gold. And I think 2,700 gold is a very significant data point, if you will, for people to get interested in gold. So what's going to happen is initially gold will lead and gold will get excitement around that fear trade. We'll have more people going to gold. And then the stock market has to sell off. So simultaneous, you get to $2,700 gold, and we might go down before we get back to 2,700, which is I think we're going to do. We can talk about that. I think I just did talk about it. But I think once you get back to 27, you get above 2,700 gold, I think that's when you get to $35 silver. And that's when people start to realize that, you know what, I'm not feeling really comfortable with my stocks, my bonds, and even my cash in the bank, believe it or not. Now, this is going to be the early birds. The early birds are basically going to go, if we go into recession, is the banking system going to have problems? The smart people, the early guys, those are the ones, the initial ones, they're going to realize it. Then there'll be, let's say, second quarter of next year. The recession has been biting since Q4 this year, but it's really starting to bite, late spring. That's when we're going to start to see some bank closures. And those bank closures is really what's going to drive the fear trade. Remember, we had like 3 bank failures a couple of years ago. Well, that was really the beginning. I think we're going to see over 100 bank closures, over 100. So I don't know how much more than that, but I think we'll see over 100. And so a lot of those will be somewhat good-sized regional banks. And so that's going to scare people. And on top of the stock market basically being down, you put those two together. Banks are failing, companies are going bankrupt, stock market is down. That's when the fear trade expands. And as it expands, that's how you won't be able to keep in stock 5 and 10 ounce bars. You just won't. You'll be doing back orders for the next 3 years. You will not be able to, and this is how it's going to be for all of your peers. And so what will happen is that once you get about $35 silver and the fair trade kicks in, your local coin shop, it'll flip from 5 buyers to 1 seller. And they'll be out. And once they're out, a coin shop, they usually don't carry much inventory. They're usually out in one day. And then the coin shops will all be out in a global, nationwide. And then APMEX, which has the largest inventory, they'll be out of 5 and 10 ounce bars. Once APMEX is out of 5 to 10 ounce bars, that news will get around. It will not take long. The internet with all the social media, they basically say, I tried to buy some 5 ounce, 10 ounce bars, APMEX is out. Well, and then they'll basically say, well, these guys have it in stock. And they'll name about 3 of them. And then a week later, there'll be one name, and then boom, they're gone. You won't be able to find any 5 and 10 ounce bars for sale, except for on eBay for 50% premiums. And those won't stay on, it'll be hard to get those. It'll be it's going to be really wild. I've been saying Q4 is going to be wild. And I think there's a good chance we'll get above 35 in Q4. And basically, we'll start to see the run on the retail side of things. I'm expecting to see flat out shortages of 1,000 ounce bars before we get to $50 silver. That's my expectation.
Now, looking at the time frame of this, you're looking at maybe $35 silver this year. Now, for a recession, though, that it'll be a few months until that's even officially announced. So, can you kind of walk our viewers through kind of the time frame that you're looking for the recession and also this move in precious metals?
Yeah, I expect the economy to stop growing in Q4. And but the thing about this recession is I think everybody will know we're in recession in Q4. It'll just be flat out obvious. You won't need 2 quarters in a row. I better go, we're in a recession here, people. I've been saying that when we get to January 1st, we're going to look back at Q4 and say, what just happened? And then the second thing we're going to say is, do we have a path forward? And if you're smart, you're going to realize we don't. There's no path forward, which is a really scary thing. And this has been building for a long time. Everybody's in denial. Most people believe the mainstream media. And if you're paying attention, you can't believe them anymore. it's all propaganda. Everything's a facade. I, I think it was Steph Pomboy who said that this stock market is basically being held up by air. And I agree. I think it is. I think the stock market, Jeremy Grantham said this is the most vulnerable market he's ever seen. And I agree there. It's like, and it's not just the stock market that has the problem, it's the economy that has the problem. And the reason why is because when growth, our economy, our capitalist system is based on growth. And about 40%, maybe more, of corporations right now are not making money, and we're growing now. So, what's going to happen to those 40% when we go into recession? The banking system is right now is basically feels like they're in a recession because of all their CRE exposure, commercial real estate, and they're also seeing delinquencies, car loans, credit cards, mortgages. It definitely feels like a recession to them. Feels like a recession if you're in housing, if you maybe some of the new home builders, but even the home builders, I don't think really feel excited about this market. And then the autos, if you're making cars, I think GM and Ford are not super happy right now with the economy. I think right now you'd have to say the economy is slowing, and a lot of corporations and sectors are nervous. And and like I said, this right now, we cannot afford a recession because of the over leverage, which is going to exacerbate things. For instance, if you do go into recession, the corporations are all going to put on hiring freezes. You won't be able to replace your job. So if you get laid off, good luck replacing your job. That will happen, and then there'll be lots of layoffs. It's going to spiral out of control very, very rapidly.
And I think just to give our viewers kind of an idea of what has already happened in the retail space, like you mentioned, when we saw the banking crisis back in 2023, like the March, April timeframe there, when a few banks went under or were taken over by FDIC, JP Morgan took over one. We saw here at Miles Franklin, 4 weeks until we could get anything, right? for many of the products. So phones were ringing off the hook. It just changes on a dime sometimes. And it's crazy how fast inventory just is wiped out.
Boy, I really appreciate you being here to be able to say that and confirm what I'm saying is going to happen. People can really recognize that, hey, what Don said is absolutely the likelihood of what's going to unfold here. Basically, inventory of retail 5-ounce and 10-ounce silver bars, poof, gone.
And another thing is, it's not even just the inventory, it's the getting everything out the door, right? So even for products that we had, the few products that we had, it was still going to take weeks until it could actually get out the door because so many orders were ahead of that. I did want to discuss also kind of some new developments we've been seeing. It's around the world also. Other countries are recognizing the financial issues here in the US and also with the US debt, the dollar. We talked last time about the BRICS nations and a possible gold currency. I did want to get your update on that because we have seen Russia continue to buy gold, announcing that I believe this was posted on the Jerusalem Post that they reported that Russia was going to be selling oil and buying gold. Your perspective on that latest development and what it might mean for the Eastern nations or the BRICS nations moving more toward gold and away from the dollar.
Yeah, this is a big topic. I really don't think that people really grasp the significance of what the BRICS are doing. This all basically began when the Ukraine war started. Prior to the Ukraine war, China and Russia were basically enemies. They were not natural. They're not natural allies because of their geological location. They both want to dominate Asia, and they both want to basically make deals with those. They want to have economic deals with the countries that surround them. So they're not natural allies. And we, by creating that war, shifted the entire geopolitical landscape, both with security and economics. I mean, it's massive. Basically, what happened was Brzezinski's book all came true. If you go back and read the Grand Chessboard, I mean, that book explains exactly what's happening right now in Eastern Europe and in Asia. It's basically what he basically called, it's kind of reshuffling. It's the reshuffling of the global order. And the U.S. was always going to have a problem with its global hegemony that was created after World War II. And Brzezinski, he wrote his book, I think 2008, somewhere in there. He basically recognized kind of how the world was going to change. There's no way the U.S. could maintain its position in the world. So the Ukraine war basically was the trigger, if you will, for what he writes about in that book, how the U.S. is very likely going to get marginalized out of Europe and Asia, both, because he called it Eurasia. So basically, Europe and Asia are natural linkages. And that's what Russia was doing with its oil exports, natural gas exports to Germany and to Europe, is it was creating this natural linkage that was kind of inevitable, this economic ally. So you create economic allies between Russia and Europe. They become, why does NATO exist, right? NATO goes bye-bye. And that's kind of what Brzezinski said, that the U.S. could not allow NATO to go bye-bye, because if it did, the U.S. would be totally marginalized, because all the economic deals, if you will, would be made between themselves. And the U.S. is the outsider looking in. And so that war basically triggered what's happening today. And what's happening today is the BRICS nations, because Russia and China allied up, they basically said, look, why don't we just expand the BRICS, which was originally just 5 countries, right? BRICS, Brazil, Russia, India, China, and South America. That was those 5. It was just 5. Now it's over 30. I mean, it's crazy. I mean, I think right now the number of people that want to get in is like 50 nations. Even France said, can we come in? And they said, nope. So they're basically going to keep Europe out and let everybody else in. And that is going to create, like I said, it's not just an economic alliance, it's also a security alliance. Those go hand in hand. And so the first thing that they want to do is they want to marginalize the usage of the dollar. This is really economic warfare. And Trump recognized it, and he actually said something about, we're going to penalize you if you do this. But that won't work, right? It's kind of those type of wars are always lose-lose. And so that's coming. That's one of the reasons why gold is going higher. There's rumors this week, that Russia is buying, not Russia, Russia is buying more gold. The other one is Saudi Arabia. They said Saudi Arabia is buying gold, and they have a lot of dollars. So that basically, if they're buying gold, they're probably selling dollars to buy gold. The other shoe to drop was Turkey. Turkey asked if they could be in. Now you have Turkey, Iran, Saudi Arabia, all basically aligned with Russia and China economically. This is huge, and that's what that book, The Grand Chessboard, is all about. It's all about showing that all of these countries are naturally linking up. It was like an inevitability because they're all geographically connected. And where we made a mistake is we allowed both Africa and South America to basically not align with the U.S. We had the North American NAFTA, but we never created a linkage for all South America. So now South America has gone up for grabs, and so has Africa. And so those countries are going to align with the BRICS. The U.S. is totally marginalized. So let's go, man. So that was just an overview. Now let's talk about why gold prices are going higher and possibly going a lot higher in the near term. Because the BRICS want to create some type of a cross-country currency that they can use between themselves for international trade. And they haven't figured out what they want to do, but they've been saying over and over again that whatever token they use is going to have some type of a gold backing. Now, I don't think they're going to announce it in October. If they did, gold could rip to 2,700, 2,800 by year end. Some people are even saying 3,000 by year end. I'm more in the 2,700, 26 to 2,700, because I think it's going to go down. We'll have a lot of downward pressure, but I think it will bounce before the end of the year. But I don't think we get to 3. But the BRICS are the wild card here. If they do announce a token that partially gold backs. Now, the problem with the BRICS currency is that it only really helps exporters. If you're an importer, you have to buy your imports with that token, and you have to buy the token. So, a country like India, if it benefited all sides, they would have already done it. And so, India is one of the countries in the BRICS that, and several of them are not exporters. So, if you have to buy this token, that's like buying the dollar. You're going from one currency that you have to use, one quasi global currency, to another one. It doesn't really benefit you. It doesn't really benefit your currency, and India knows this. So how are they going to overcome that problem? It's going to be interesting to see how they overcome it. I personally think the solution here is to subsidize the importers, the countries that import. They should get a discount to help their currency. So a country like India, maybe they get a 5% discount on their tokens because they don't, they're not exporting. And maybe they only have to pay that, maybe they only get that discount from countries that are big exporters like Russia and China. I'm hoping, I haven't heard anybody talking about this, but it seems like a legitimate way to get India's interest in a crypto-backed, gold-backed currency.
I think that would be very interesting. And it seems like there are a lot of ideas out there. But what we can all see is that a lot of these nations are accumulating gold. Now, I did want to ask you, do you think there's going to be any response from the US on this? Do you think some people have talked about gold confiscation, right? Or I could see maybe a scenario where if there is a gold-backed currency in the East, maybe the US starts considering gold, they're going to put whatever label on it, you're being unpatriotic by buying gold bullion or something like that. Do you see any scenario like that where it'll be harder to own gold, or there will be a politicization of owning gold bullion?
No, I don't think so. It's a possibility, but I think it's a low probability. I don't think that the government is going to go anti-gold because I think they're going to recognize that this is a legitimate option for investors to own gold. I don't think they're going to see it so much as kind of anti-dollar, although it is, because you're trading your dollars for gold. But on the whole, here's an interesting thesis, basically. I think that the big money, Wall Street's going to be buying gold. So it seems like whatever Wall Street wants, Wall Street gets. Now, if Wall Street didn't want to buy some gold for hedging their customers, then yeah, there probably would be. But I don't think that Wall Street is going to, they're not pro-gold, but I don't think that they're going to, backlash against it. That's just my gut feeling. I just don't think there's going to be like gold confiscation, that stuff. I just don't see that happening at all. I see, crypto and gold. As a matter of fact, I think the government's more anti-crypto than they are anti-gold. And I don't think that's going to flip when now they're more anti-gold than anti-crypto. It's like these are new assets. Well, the crypto is new assets, but these are assets, both gold and crypto, that people use as hedging, as investing. And I don't think the government is really going to attack both of them. I think we're kind of past that. Although if Harris wins, I do think she will be anti-crypto. She'll try to slow things down. There's a lot of unknowns out there. But where I do think that they're going to go against is silver. And the reason why they're going to go against silver is because there's going to be shortages. And once there's shortages, the corporations are going to be calling their congressmen and senators and say, I can't find any silver. I'm going to shut down my manufacturing plant. I need some help there. So I've been saying this, is that once you get north of $50 silver, the potential for shortages really increases, and the potential for some type of an action by the government. Now, I don't think that there's going to be a problem with selling silver or owning silver. I think the problem is going to be with buying silver. So that's all they have to do, is prevent basically retail from being able to buy silver. So that would work really well for them to basically create supply and crash the price. It'd be great for. So I think what they would do for me, if it was my choice, the first thing I would do is get together with the G7, even G20, and basically say, look, let's outlaw the silver ETFs. We got to empty them out because there's shortages of silver. Those guys are sitting on 1 billion ounces. We need to dump that 1 billion ounces on the market. And initially, that would probably push silver down maybe 30%. But once they went through that 1 billion ounces, because then people would start hoarding it, right? Throw the 1 billion out there, and it would probably be gone in a year. And once that inventory is gone, then the silver price will start going back up. And then what they would do is they basically create a law that retail couldn't sell. They couldn't sell it. So the wholesalers could only sell to fabricators. That'd be really easy to do. Now, they could just do the latter. Let the ETF stay in place. You can buy paper silver if you want, but you can't buy retail silver anymore. You can only sell it. That might solve the problem. But I see either one of those happening or both or something else. But yeah, but somewhere between $50 and $100 silver, I think we're going to get a big correction when they do this. But I don't think it'll be long lived. I think after about a year, once that inventory is worn off, and the inventory is gone, I think a lot of people are going to hodl, are going to hold on to their silver because they're not going to force people to sell their silver. But so people will hodl more, and there'll be a black market where people are buying from each other, absolutely, because you can still sell it. But the rest of the world, this is where it gets interesting. So they could do that like in the G7 or the G20, but they couldn't do it globally, which is interesting, right? So the rest of the world who basically didn't outlaw the purchase of retail silver, those guys are going to keep buying. So after a year, silver prices are going to start going back up again. So all they can do is basically kind of fix the inventory problem to a certain extent and lower the price, but it's going to be short-lived. So if you're a hodler, I think eventually after this, like we might have a 1 year down. I think silver starts roaring back up. So it's not the end of the world if you own physical.
I think it will be very interesting to see what happens as we continue on in this bull market. It seems like a lot of unknowns there, but there are a lot of major players that seem to be moving into the precious metals, like central banks, right, all around the world, and also retailers. It seems like whenever there's an issue in the economy or an issue in the banking system, often retailers are wiped out of product. So it'll be very interesting to see where we go from here. If our viewers are interested in learning more about your work, they can go to goldstockdata.com. Can you tell us a bit about that and any last thoughts you had?
Yeah, last thoughts, and then I'll tell them about me or whatever. So I was at the Beaver Creek conference, and I asked a few people, I said, we've had like a 400 million ounce deficit in 1,000 ounce silver, and a lot of that is 1,000 ounce bars above ground inventory that's basically been consumed. And I asked them, I said, where's it coming from, and how many ounces do you think they still have left? Nobody had an idea where it was coming from. And then I said, I think it's about 50 million ounces, and most of them basically said that's probably a good number. So my point is that there's not a lot of 1,000 ounce bars right now in wholesale inventory. And most of the silver inventory is basically in futures exchanges, and that's really, you have to go and buy a contract to get it, or the LBMA in London. But there's not a lot of places. Like right now, if you wanted to start a silver ETF and you wanted to raise 50 million ounces, I don't know if you could. And so my final point is that what happens if a few billionaires or a few hedge funds decide that they're going to accumulate physical silver and put it in a warehouse? They could wipe out the inventory in a month. So that to me is really interesting. If you look at the dollar total, like if you do 50 million ounces and if we do it price $20, I think that's $1 billion. It's like peanuts. It's like there's hardly any there, but I need to double check that. So if we do 50 million times 30, I think it's 1.5. Yeah, it's only $1.5 billion. It's absolutely peanuts for if that's what the wholesale supply is, for a few billionaires to soak that up, or a hedge fund to soak that up. All right. So first of all, if you own any gold and silver mining stocks, then check out my website. It's not really for people that don't own them. Not really a stock picking website. It's more for data, so you can do your own research. But if you don't own any or interested, read my book. And then after you read my book, you'll get an understanding of, what it's all about and how difficult it is to invest in gold and silver mining stocks. But Elijah, thanks for having me on.
Well, thank you so much, Don. It's always a pleasure to have you on. I will put links to all that in the description of this video, your website and your book there. So yeah, thank you so much, and you have a great day, and God bless.
Thank you.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of Pamp 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.